Yo, yo, yo. Welcome back to the channel. Video is going to be a little late today. My parents, Luna's grandparents, were watching Luna, and they dropped her off. So I was here by myself with her, so I was just doing some dad stuff. So I apologize for that. But let's get into the daily update, looking at the markets. And I want to talk about this Nvidia move in after hours for earnings first, just to talk about go through some of the methodology that I was talking about in this tweet, and why I was seeing things the way that I was seeing them. Now we're looking at the minute time frame here, right? And what you saw early in the day was this sort of accumulation look, and it's kind of hard for me. And I need, and this might just be an experience thing or something, but I want to find a way to better illustrate this. But generally speaking, and this can be a tricky thing, so you really need to practice this. Don't just turn around, take what I say in this video, and then use it as some sort of trading methodology for yourself. Really, really pay attention to things like this. But you see how you have this sort of, the price is generally pressing downward. In a weakening way, but it's sort of rounding out, right? This is an accumulation type structure, and this is the opposite of that, which is a distribution type structure. And if you've been following the channel for a while, we've talked a lot about Wyckoff Theory, which is a relatively new way of perceiving markets for me, because it's only been really the last year and a half that I've been viewing it through that lens. And it's just one tool in my toolbox. I look at, regular, strict TA patterns like wedges and triangles and things of that nature. I use Elliott wave theory. But I really do like the structure theory that comes along with Wyckoff theory and being able to apply that to markets. And I'm trying to find a better way to explain what is happening here, right? Like, you just have this gap, right? Like this area of the chart is the empty area, and the price is forming around it, right? And so what I said in this tweet, someone asked me on Twitter, and making money. He's actually a long-term follower of mine. He's been around for a while. And he asked me, what do I think of NVIDIA earnings, dump or pump? And man, this is really interesting how this played out. So all I could see at this point when he sent it to me, because I hadn't looked at NVIDIA's chart, was this section of the chart. And I was looking at it and I said, this looks like distribution to me. And what it looked like was, right, because you have this rounding top, this empty area of trading, what it looks like is you're trying to bait retail into buying the stock because it's trading relatively high, right? And you had this big buying climax at the beginning of the day, but you've had this weakening price structure. Now, for institutions, this looks like weakness, but for your average retail trader, this is, oh, the price is holding high, so perhaps it's going to go higher, right? Especially if you're holding call options that you bought in the morning, right? You have very high percentage return gains. Every retail trader wants to see their gains go to the moon. And this red line that you see here is the rejection point. We'll talk about that in a little bit. And then this gray line is the larger Fibonacci. So what I was expecting to happen here was I was expecting price to trade up. So even if you have this bounce like this, and then trade off of 172.50. And what I said was, I want to see it close. If it's under 173 by close, I'm expecting it to dump. By the way, I don't play earnings in this way from a technical aspect, because I just think that earnings is kind of like a way to wash out retail as well, and you're really guessing. It's usually, to me, it's an insider trading thing more than anything. Now, what happened was, you continued to develop this rounding out structure, and this is what I was talking about when I mentioned consolidation. I wanted to see this sort of sideways consolidation here, and then a markup phase into 173 or so, right? And actually, that's what you saw happen. That's what you saw happen. But it happened a little too soon. You distributed out of this quickly, and you actually closed below the 173 level that I was looking for. You got rejected off of this point here, which was the previous distribution liquidity zone, right? So this was previously where you had supply. You got pushed down out of this. You close below the Fibonacci level, below the 173. You come back and retest for what we would call an LPSY, and then you absolutely dumped out of this exit here. Now you're trading all the way down to 165. So puts were the play here. And again, I don't typically play earnings in this way because I think that earnings are extremely high risk. And I think that it's actually much. I just think that there's loaded up fundamental stuff, and it's funny because you can look at this short term and see a distribution, see an accumulation, and you zoom out, and what you see is actually a larger distribution, right? But is this larger distribution just a part of an accumulation and you're coming back and retesting? You see this? But as you zoom out further, and this is why I don't play earnings, because what in reality, this is a distribution. This is a macro distribution on NVIDIA. And I am expecting NVIDIA to trade lower than this. I'm expecting NVIDIA to go down to 126 at some point, most likely. But in the short term on that earnings, what can happen is you can just get pushed up temporarily for another redistribution before you get sent down further. So I just thought that was an interesting analysis and perhaps an insight on a way to be able to play earnings and be profitable. But at the same time, I just think that earnings is, it's truly gambling because you're just betting on in that very short period of time where price is going to go. But I do think that it was an interesting analysis nonetheless. So make sure you're following me on Twitter because that's where you're going to see like tidbits and stuff from me throughout the day. We could have gone into volume analysis on this and everything like that, but I did think that was an interesting moment. I mean, you could be seeing an accumulation occurring here, couldn't you? So it's just a funny market structure. Let's look at SPX. Actually, what we were expecting to happen today is exactly what happened. You had this bounce up. You got all the way up to 4160-ish, and you actually got rejected down. So I'd say this arrow or this path was drawn a little bit too optimistically. You could see continuation to the upside over the course of the next few days. I do think that you test this 4174 before you get sent lower. But overall, we're kind of on the same path that we were with SPX. Nothing is really happening out of the ordinary here. I still am mostly expecting this sort of path to play out, these EMAs to trade the way that they were. If you're curious, the purple is the 9-week EMA, and the teal highlighted is the 21-week EMA. I'm sorry, not EMAs. Those are simple moving averages, sorry. And all the faded ones are other major simple moving averages on higher time frames. But I'm not really focusing on those right now because they're not truly relevant to the price action over the course of the next few weeks. That's how we're looking at the market. And how does that translate to SPY? Well, SPY had a pretty good day today, right? Overall, you went up 0.3%. You are starting to get that rounding bottom sort of look. This really does look like it wants to come up in a similar pattern, right? This is a distribution, like you want to come up and retest 418 at some point. So I do see that correlation occurring. I think that you really do continue to consolidate in this region, as we've talked about the past few videos. You stay within this red zone for a little while, and you're going to see some boring consolidation over the course of the next week or two. But there will be opportunities on supply and resistance within this region. You're just waiting for that first move. But whoever breaks either direction here and gets a successful retest, right? So it could be, just for example, I don't think that this is what's going to happen. But if you have a successful retest here, I think you get pressed up really hard. And on the converse, I think that if you have a successful retest for bears, you get pushed down really hard. So, but I do think that before that happens, you're probably going to see some of this turbulence, bouncing around, some accumulation, and then some distribution before anything major happens. And then you probably retest I think most likely you retest your uptrend, your downtrend, because I think that's what retail is least expecting. Retail really wants the market to crash, in my opinion. So that's what I think is going to happen. Institutions aren't going to let it happen. Bitcoin is right on track with what we were thinking was going to happen. Actually, the path played out perfectly. You traded right up into this zone. We're going to see if Bitcoin rounds out here and trades back down in the way that I was expecting. But I will say that this really does look like a beautiful sort of rounding out accumulation look, and you're retesting the highs of this range, right? Right now. So it's going to be interesting to see if Bitcoin can hold this 21,650 level overnight. If it does, and especially on the daily close, let's take a look at that. So you have 2 hours and 40-ish minutes left. I think overall Bitcoin looks pretty strong here. You have good volume. You got pressed down to this uptrend here, this major uptrend that we've been watching off of these 2 points, and you've rejected bears multiple times here. So it does start to look like an ascending triangle. But you guys have recently witnessed those not play out the way that we were expecting. I do think that Bitcoin presses up from this range. But I will say, if you break this uptrend and you close below this uptrend for the first time, it's bear city, and you're getting pressed down to this further down uptrend, which is, I think, the dotted one is a much more macro uptrend, if I'm not mistaken. Yeah, so this one is drawn back all the way from April 2013, which is going to be very strong support. So I don't think that Bitcoin is going to go to the ditches soon. If it does break this trend, though, very well expect... 13.5 looks very attractive as the next level to be retesting. So just be wary of that. I'm trading futures on KuCoin. That's my personal preference. That's what I like to do. Ethereum, right on track, doing exactly what we drew out yesterday. I really do think that you just are rounding out here. You're bottoming out. This looks like you want to move up, at least temporarily. So that's what I'm expecting. On the crypto front, let's take a look at AMC. AMC, actually, you retested again this bottom trend here. Let's make that nice and bold. You retested this again as support. I really do think that AMC as well is really rounding out, looking like you want to come back to the upside. And actually, this is why I really like that, the way that this played out is you get left with this big nasty gap, and you're trading at this very key level. If you can round out here, reclaim this uptrend, you're going to press back up to $17 on this thing very quickly. And everybody is very uncertain and very uncomfortable with everything that's going on fundamentally with AMC. And look, I'm going to be honest. I've never really been involved in something that's like getting traded in that way. But I think overall you're in a pretty optimistic place. Does this mean you can't push lower? No, not necessarily. But I do think that for the long term, this is a really good look. And it could take a little bit of time, right? You could lollygag around a little bit. Mess around, do all this stuff. But I think overall, over the course of the next few months, you're really looking optimistic and bullish here. And if you're holding on to Ape as well, you could be getting a 2-for-1 sort of deal here. So I really do like the way that AMC looks. Ape, we don't have as much data on. You really are getting a little sideways here now. So I do think that probably on Ape, you're going to press down a little bit lower, maybe test the 645-ish region again, see what happens. I think that actually like 610-ish looks pretty attractive here. Just a lot of gappiness in this chart, but it's only a few days old. So I'm not holding it to some crazy standard, and I'm not really expecting too much or too little from this. And I know that there's a lot of controversy within the AMC community as to I know a lot of the original, it's really weird, but a lot of the original creators that were around in 2021, July, June 2021, after the June press up, a lot of those guys are saying, yeah, I'm selling my Ape, I'm buying AMC, or this person will say this or that, whatever. That's not really in my business. I don't really care what anybody does with their positions. Personally, for me, though, I'm holding both. I want to see how things play out. I'm not in the camp that I want to really reposition myself in that way where I'm taking everything out of one side of this and going all in on the other side. It just seems a little it's just very out of character for me personally as an investor. It's not something that I would do. So I'm just going to hold on to both. I'm going to trust in the process of what the company is doing, which is what I've been doing from the beginning here. And I'm just going to let it play out. But I do like the way that these charts are playing out. I think that, again, I think Ape can press down. You do have you will realize pretty significant losses on this side, but I think AMC is going to make up for it. And I think that there's a bigger thing at play here from a composite man standpoint. GME, you got pressed down to 32.50. I am fully expecting this thing to press down to 29.50. 30, 37. This looks like a clear rejection to me. So I'm totally expecting that. Honestly, yeah, I would be very surprised if you didn't press down into this golden pocket now. So we've been following this, and I've kind of been setting that expectation day in and day out. I do like GME's chart on a more macro level now, but that doesn't mean that in the short term you can't get pressed down. So I'm looking at this as a chance to, once this price starts to round out and bottom out here, maybe accumulate some more shares of GME, because I'm not as heavy in GME, but I would like to be, because I like the way that the chart's playing out. I think that there is a narrative coming around in the next few months for these stocks. So hopefully you enjoyed that video. It was a quick update. If you haven't already, make sure you like the video, subscribe to the channel. By the way, GME, you're probably pressing up short term, right, to 33.75 or so, but I do think that you end up getting pressed down afterwards. And you could go even higher than this, but I really don't like the way that GME looks like in this very short term, like this most recent trading range. But anyway, make sure you comment your thoughts down below. Tell me I'm a shill or something for not liking the chart in the moment. Make sure you drop a like on the video. Tell your friends about it. I have a free Discord community. You can go join. A lot of people sharing TA, like-minded type folks like me. I really love those guys over there. Thank you, Dazed, by the way, for holding it down in the community. I see you, bro. And follow me on Twitter. And until next time, peace.